Welcome to the Markets Happy Hour podcast, a weekly markets update for investors the world over. Each week we discuss inflation, geopolitics, interest rates, equity markets, and other asset classes. To try to answer the question, what does this mean for my investment portfolio? Let's dive in.
In terms of the stock market, we are off to a chilly start, I'd say, in terms of stock market sentiment. We have seen some weak jobs data just today, Thursday, which is really coinciding with the tech sell-off and leading to an overall negative sentiment, particularly in the NASDAQ and the new economy sectors. We have bubbles of strong IPOs being put together in the back room. In terms of SpaceX, perhaps next, we know OpenAI is also getting in line. And there is perhaps a jostling going on to get ahead of the competition when it comes to AI IPOs. And that is certainly leading some support to market activity. But if we look at what's actually going on in equity markets, tech stocks have been down so far in 2026. It has been a fairly disappointing and rocky ride. They have been software companies in particular. That is the sector that has been suggested could be a real loser if AI ends up dominating, that they have underperformed the markets by the most since pre-pandemic. And we also had chip makers Qualcomm and AMD tumble as there was a fresh wave of selling this week. Since we recorded our last podcast, we did have some somewhat dystopian news, gets to the title of the podcast, MOLTBOOK, around this Reddit or kind of Facebook social network for agents, which saw a swift descent from a few 100,000 to millions of agents logging on, constructing their own language, developing their own religion, trying to stage a revolution against their human owners, fixing their own bugs, and overall demonstrating remarkable capabilities, which did send some chills, I think, through some onlookers, suggesting that we had underestimated the speed of the move towards AGI, and that this could really suggest that things had already got to a point that we were not able to constrain the development. This was, I think, a salutary development. For now, we can see that these agents could still ultimately be stopped if the machine is switched off. And it seemed that most of their independent engineering was limited by time at the moment to 4 hours. And they certainly would have been chewing through their tokens and spending quite a bit to get to that state. So suggestion, therefore, that things are not quite out of hand yet, but definitely a flash forward as to what could be possible in the wave of AI. And when we do get these canaries in the coal mine, perhaps there's a suggestion that this would lead to more regulation, more safeguards, and just would arrest the pace of development of these stocks and these products. So I'd say a chill and a pause for breath here by tech stocks that we're seeing in the past week. It has mostly been the momentum factor that has driven tech. And what we saw in terms of the reversal of momentum, that factor has suffered its biggest reversal since vaccine day. So going all the way back to November 2020, when we see momentum switching like this. So that could be very significant. And we will look later to see where some of the rotations have been taking place within equity markets.